Good weekend. Ira Epstein, and here we are with the weekend edition of your financial market wrap-up. And this wrap-up is for one weekend that's taken the air out of a lot of us. You have to understand what's been going on, but it is October 20th, Friday, 2023. So I brought up to you last night that my idea was we are in a geopolitical market, not a market that is paying attention to the market fundamentals. It's not trading on Fed talk. It's probably not trading either. And I'm talking most markets. They're not trading on chart patterns. They're trading on the war and what that might mean, where it might drag you. So the markets that do best in those are typically in a true war. And remember, we get so many things that we think we're in a war and we're not in a war. But in this case, gold is back up to the 2000 level. The silver's been dragged with it. Copper's not participating, and you're getting a little participation in platinum. The other markets that you would think would go with it, all the energy's backed off. So the logic doesn't quite fit in there. You went to 5% interest rates this week and you backed off. It's like a magic number. You hit something that you haven't hit in many, many years, and you're in a resistance point. In the grain markets, out in left field, this is a big break. When you go from 509 to 495 in a corn market, corn, that's a big move in corn. It happened, and most of the grains came back down. So if you're trying to make sense out of everything, stock market, why is the dollar lower going into a war weekend potentially? Don't try, because the logic won't work for you. That's what I've learned. I've done this 54 years. I've been through war events, and the best thing you could do is run away from them because the logic doesn't work. In this case, it's one of the few cases where the gold is playing out. But if you were a buyer today in energy for the weekend, this market sold off and you're going home from anywhere near the highs, near the low of the day. Why? Well, we did see 2 hostages released. We now have an inkling, I think an idea, is why the soldiers have been sitting there and they didn't move into Gaza, is behind the scenes. There's been talk with a number of communities, different countries, with Qatar, talking to Hamas and trying to get something done. Is that going to be enough to stop it? I'm not a war strategist. I don't know. I didn't think Israel would attack, and I could still be wrong. It's Friday night on the Sabbath. But come tomorrow, that's Saturday, game over. They can do whatever they want to do at that point in time. And that could be because they've got a number of soldiers there that, while they may not be the most orthodox, they pay attention to the Sabbath, and the Sabbath is something to start a war, they may not want to do on. Don't know again, but that's the Jewish religion, and it's part of it. So what do you do with this? Well, over the weekend, you look at the news. Is there going to be the invasion? I'm going to repeat what I said last night to make things easy for you, at least from my point of view. Geopolitical has its own life to it. It overrides everything else because you're scared the world is ending. You don't know if there'll be any more oil. You don't know if the U.S. is suddenly, we're going to wake up in the morning and the U.S. Carrier fleets there are battling with Iran. You don't know this. You don't know if a ship won't be sunk by a missile that came out, one of ours, and where does that take the U.S. at that point in time? That's called geopolitical. If none of this happens and it's just Israel goes in and does whatever they're going to do for however long they're going to do it, the market moves to a different phase in the geopolitical. The end is in sight. Whatever that end game is, you're not at the beginning, you're in the middle, and then the end game is in sight. As that end game comes in sight, in my opinion, the markets will start paying attention and go back to normal trading. So if you're frustrated this week, and let me come clean. My trades this week, I think I had one trade in the futures markets. It didn't work. It was a $400 risk roughly, and I backed away. I had nothing else there for my subscribers. All right, so that was what I was recommending. I didn't get hurt, but I understand the frustration, and that's the point. When you look at the S&P on a monthly basis, you can't trade off monthly charts, but you get an idea. Coming back into support at the 41.22. If you really look at this market, it's back to fighting at that 4,200 level that we have heard about over and over. When you look at a weekly chart, you're accelerating to the downside. When you come to this bar, you can see that we're coming back into these low areas here, another 50 points or so, and you're into that 4,200 zone. But you've got a stepping ladder pattern to the downside. So is this the case where the seasonals, the 15, the 5, the 30, don't work, and that October 4th through the 15th timeframe may not hold up? Time will tell. This is the most volatile month of the year, typically. Many of you don't remember October crashes and things of that nature. It just seems to happen. And if you're a volatility student and you run some of your studies, you will see what I am talking about. It is known as one of the most volatile months on the record. Generally, September is the largest losing month. This is the most volatile, and then the market seems to come out of it. And if you're going to get that Santa Claus rally at the end of this month into November, the market seems to get its footing. Doesn't mean it will happen this year. The war drags on, different things happen. Geopolitics overrun normal trend patterns. Just remember that. So when you're here, is the trend down? It most certainly is. In order to break this, you got to get back over the 44, 30, 50 area. Number two, the next support in the market, one of them, is the 100-week moving average. And the resistance now, since we've been about 4 or 5 weeks under the 18-week, is certainly that number. And you're at the Bollinger Band. So as a market technician, forget geopolitics, this is where the market should be holding. Right in here, right in this general zone. That doesn't mean that it'll work because of the geopolitics. In addition, you're oversold. So if it were not for the war and the market was just here on Fed action, other actions, that's what I would be saying. I don't know how you play that war event. When you take a look at the Dow, it is the same thing. Now you've actually gotten, you can talk, lower highs, lower lows into the 100-day and the Bollinger Band. None of this is a buy. The question is it a short sale? And I don't see that. First of all, I would never tell a client to sell a Bollinger Band. NASDAQ, same thing, coming back into this whole area and oversold. And the weakest of the markets, the one you don't want to own and the one you don't try to say, oh, this is pulling the markets, is the Russell. When I heard, you do remember, I'm sure a lot of you listen to me every night, and I keep saying, I see these pros coming on who are generally very good at what they do. And they're going, well, I think interest rates have peaked out. Can't argue that, they might be. And I'm buying the Russell. Well, you're getting your butt kicked, all right? Because peaking them out doesn't mean they're coming down, and those type of companies can't withstand that pressure. So when I see people do that, I go, I don't know where he's coming from other than he's throwing a dart and he's decided to pick a bottom in the market for that. Well, at the end of this, I don't know how much pressure their clients can take, nor do I know the companies that they bought. But when I see that, I just go, wrong time. I'd rather come in after the fact when a trend is set than try to pick a top or a bottom. It never works. In the 5-year note, all I see is a bear trend. Should the market bounce away from the Bollinger Band? It normally does. But you've latched onto it. What do we call this trade when each and every week you're hitting and riding that number? The Gorilla Glue trade. It happens on weekly and daily charts. And when it happens, it's often accompanied by a bearish embedded reading. For me, and for the guys that are trying to pick that Russell, when you lose the embedded reading, if you want to take a shot going through the back door, the Russell might be interesting. Not here. Until that's lost, I don't know how deep it's going to go. I know that those short are making money and they'll sell the rallies until that number is lost. I have the same thing in the 10-year. All right. You've latched on and you're going lower. How much lower is anybody's guess? But the trend is down, the bias is down, and momentum is locked in bearish. In the dollar index, as much as you're falling on the daily chart 5 points, 7 points, you haven't given up any of the bullishness here. So if you're playing for the bigger market, well, when the red line closes under 79, I wouldn't want to be long anymore. Up until that time, any surprises should be bullish for the dollar, potentially kicking it up even to 107.51. This doesn't have to be done to the upside. We have some counts on price counts that are over the 110 level. So when you're trying to fight that work, I'll stay with the work that we have. Price counts don't tell you that the market has to go there. They give you ideas as to where they might go if the trend continues. In eurocurrency, look at how the market is staying down here embedded. So while on the daily chart, you're getting small buy signals, they're completely countered here on the weekly chart, which is still bearish. If you lose the embedded reading, I'll get a different opinion of it. Canadian dollar, oversold in a downtrend. Not a place I would think to deploy new money. But yes, I think you want to deploy on rallies. In the end, short positions until the red line closes over 21. This market is still very, very bearish. In Bitcoin, I made a statement to you that you now have to step back in Bitcoin and accept and look at the charts and say you don't want to be short until and unless you get the ETF go-aheads. Why? That's the announcement everybody wants to buy on. So they're buying ahead of it. And when it comes, it could easily be buy the rumor, sell the fact. The announcement being ETFs are being approved by the SEC to trade without being based on the futures markets. They can do it off so-called cash markets, all right? Those are what people are applying for. They won't have the cost of trading in the futures. It will hurt the futures volume, in my opinion, because yes, there'll be some ETFs to base on this, but why would they? The bigger money will move where there's less cost. Higher lows, higher highs, and all of a sudden you're over everything. The trend is up. The next stopping spot, 31,871. Wouldn't want to see 2 weeks ago's low taken out, but everything's pointing higher here. Then we get to the Brent WTI spread, the differential between the two on a weekly chart. 373 is where the resistance is. It just tells me when you're under here that the WTI could gain on the Brent at this point. When we come to the Brent, the market is not in a buy mode on a weekly chart. Momentum corrected, should have gone to the Bollinger Band, and it did. The market is now fighting to stay bullish, but it's overbought. There's no sell signal, but to buy an overbought market is difficult. If you're a pure technician, you're looking at these type of things. Same thing is going on right here. You're overbought, you had a break, and you didn't even get down to the Bollinger Band. But did you have to? If we come back here together, like it's not going to do it, unfortunately, I'm sorry. But if you lost the embedded reading about 2 weeks ago, it was right here. It didn't have to go to the 18-week. It was on already its objective, the 100-week, and it hit it the next week on a rally. It's a tricky piece of work when that happens. It's rare that you lose the reading right on a key moving average, but that's how I interpret it. We then go to heating oil. It almost looks like HO2, doesn't it? Water, but it's not. Even I know that from my basic science. Lower low, higher high, not from the skin product, by the way. You lost the embedded reading, and in this case, it would have been the same thing. Are you going to go there or here? It happened to go down to the other one. When you lose it on that, there's many rules I have that I pay attention to. So I wish I could tell you what we're going to look like come Sunday night when the markets reopen. A lot of it's going to depend on what Israel does. A lot of it will depend. Is Hamas, now that they've released 2 of the hostages, are they going to release more? Does that keep Israel at bay? Because world pressure will be, don't go in, let us get our hostages. These were Americans. I'm sure that behind the scenes, that's what Israel was being told by the U.S. Well, there's more of them there. I don't know. You know as much as I knew, which is probably more than I know. But when I take a look at it all, we'll cover it. And we cover it in a way for the futures markets, all right? We cover it talking to you the logic. We cover it with not only these reports, but if you get our software products, you can listen to the oral comments that we make in there. I write. I don't go for the oral, I do all these, but we have people that are doing that throughout the day and writing letters on all these different markets. Plus, you get the price counts and the other market stuff. So how do you get all this? It's simple. We want to put it into your mailbox, your email, for a limited time if you haven't tried it before. If you've tried it, well, you either open an account with us and you can get it for free, or we're sorry that we can't give it to you. But How you get it is you go to iraepstein.com under free offers. You can move your cursor to the top here, give that it, and we will see together what happens. If you have questions, call my staff. They'll work with you. I will see you Monday morning. Let's see what happens over the weekend. It's going to be very exciting. I promise you, we're not through with all this. And it's got you on a needle's edge, and now you're seeing it in the markets. Take care.